Is that your strategy? Is no matter what, like even just taking into consideration, there is going to be a bear market and you guys are just going to hodl through it and not care if the price goes down?
Welcome to Dream Richer. There's a popular joke within the cryptoverse that dabbling into crypto makes you depressed. In fact, there have been many studies that crypto addiction is a real phenomenon. And just like any other investment, crypto also comes with many mental health issues. For many, losing your money in crypto can be a very depressing situation. This is especially true for people who take on more leverage than they can handle, oftentimes putting their whole houses and wealth at risk. When it comes to losing money in crypto, nothing beats the good old bear market. It's quite challenging to make money from the crypto space these days because the whole market is very polarized right now. A bear market occurs when the prices in a market decline by over 20%. It often goes along with negative investor sentiment and declining economic possibilities. Just over the last month, the whole market has taken quite the emotional roller coaster, with the whole market being in extreme fear. Today, the billionaire investor Michael Saylor answers how he would react in a bear market. If you find the video helpful, then don't forget to subscribe. Let's get right into it.
There's a narrative out there that all of the big corporations and all the institutions, the big investment funds, they're buying Bitcoin right now and they are not going to sell it. And that's going to make us not go into the same kind of bear market that we've seen in the past. Is that your strategy? Is no matter what, like just taking into consideration, there is going to be a bear market and you guys are just going to hodl through it and not care if the price goes down, 85% again? What is your take on that? And how are you guys handling,
So Ben, just a basic set of principles. First of all, Bitcoin is the apex property of the human race. There is no property invented in the history of mankind that is better than Bitcoin. Not land, not gold, not silver, not stocks, not bonds, not the giant stone coin of the Yap people, not NFTs, not art, not baseball cards, nothing. Okay, so it's the apex, it's property. It's also the longest duration asset. That means there's no reason you can't hold it for 100 years.
Yeah,
it's better than owning all of Manhattan. I mean, it's better than owning, the center city blocks of the greatest cities in the world. This is like Manhattan in cyberspace. One day 1 billion people will live there, then one day 5 billion people will live there. We've got this issue of, is it long duration? Yes. Is it high quality? Yes. When should you ever sell an asset? And this is why people like the models are all just misleading people to make awful dilutive decisions, destroying their wealth. The only time you should sell an asset is when you have knowledge it's going to be impaired, you can't take it with you, and you can't finance it to buy the next asset. Well, this is not going to be impaired. This is property in cyberspace, and there's nothing better to buy. There's nothing better to buy, right? I mean, I'll say it a third time. There's nothing better to buy. So if you're buying something which is potentially going to last hundreds of years, and there's nothing better on earth to buy, why would you ever sell it?
It's always best to know beforehand what you plan on doing to your investments when a bear market hits. Here are 4 simple strategies to keep at the back of your mind. Number 1, use dollar cost averaging and buy the dip. An example is, suppose you have $2,000 in your savings. You could break up this reserve amount into 5 investments of $400 or 10 sets of $200. You can trade using these smaller amounts and stay safer. Strategy number 2, short selling when a certain crypto price is down. Short selling is a very advanced investment strategy for experienced investors only. Short selling means selling an asset at a high price with the intention of rebuying it later at a low price. Number 3, simply research, because many new startups and projects will oftentimes rise up during bear markets. And finally, number 4, diversify your investments across various crypto assets.
So it doesn't really make sense to trade out of that, ever. Let me make one more point. All those models, they're irrelevant. As I say, they're irrelevant. Like the 4 you're having, irrelevant. All your back-tested models for the past decade, irrelevant. They're all based on history, okay? They could only be relevant if there were no external actors or external energy sources. When Godzilla comes to the playground, your models of who's going to win the pinball tournament are irrelevant. You could tell me, I've been at this pinball tournament for the past decade, and I know that always like the two dudes on the left side of the table win because there's a tilt in the table. When Godzilla blasts your pinball table, it's irrelevant. So as the shareholders rotate, what you realize is there's no rational reason for anybody that ever earns Bitcoin or creates Bitcoin to ever sell the Bitcoin, which means that the stock to flow doesn't matter, which means the halving doesn't matter. What matters is when someone shows up with $20 billion and they want to buy Bitcoin, that matters. What happens, if Tesla buys 10 billion in Bitcoin instead of 1 billion or 1.5 billion? That matters. Is that in your model? No, it's not in the model because no one ever did it before this year, right? So you couldn't have it in your model. So that's why I think the models are only interesting in a closed adiabatic system with no new actors, with no new developments. But there's a pretty big development here. It's $400 trillion worth of monetary energy sitting in weaker assets.
Yeah.
No, we're not selling it. We're not trading it. It's a very simple idea. Wait for the water to flow downhill. And by the way, stay kind of out of the way of the water. You want to make money on this? Set up a little turbine. And as the water flows downhill, turn the turbine and you can extract some hydroelectric power off of the water flowing downhill.
It's clear from Michael Saylor's explanation that Bitcoin currently stands as one of the most secure investments in his books. In fact, this is what Michael Saylor had to say about Bitcoin. Satoshi started a fire in cyberspace, while the fearful run from it and fools dance around it. The faithful feed the flame and dream of a world bathed in the warm glow of cyber light. So it's clear that Bitcoin will attract the right investors over time and continue to grow in value. Despite certain setbacks from bear markets that are triggered by geopolitical and other factors. However, Bitcoin is bound to pump even higher in price. Do you agree with Michael Saylor? Let us know in comments below. To learn more about the latest crypto news, watch these videos here.